During the last week, Rupee was traded with the stable undertone, the high and low being 74.57 and 75.02 respectively. On most of the days in the week, Rupee was traded in the narrow range between 74.60 to 74.80, and the dollar's weakness against the major currencies and the significant rise in the BSE Sensex lifted the rupee to trade higher. The accretion of forex reserves by about $5 billion in the last 2 weeks has supported the rupee to remain broadly stable. In the background of the domestic currency's stable undertone against the dollar, we recommend the importers to hedge their payables up to the next 3 to 4 month maturities at the spot target level of 74.50 or better. Against the medium-term export receivables, it would be a good strategy to undertake option structures not exceeding 15 to 20% of the aggregate receivables in the set period by buying put at the strike rate of 75.50 or so and selling call at 76.90 for enhancing the export realization in relation to the expected market outlook over the corresponding period. In the remainder of the current financial year, we do not expect the rupee to depreciate by more than 3 to 4% in absolute terms against the dollar over the pivot level of 75.00. The anticipated rupee depreciation till the end of the current financial year overstates the prevailing forward dollar exchange rate for end March 2021 maturity. The USD INR exchange rate held the support at 74.50 on more than 2 occasions in the recent past, and with deteriorating risk sentiments, the USD INR currency pair can be expected to maintain its range between 74.50 to 75.50, with 75.00 acting as the pivot level in the next 1 month time frame from now. The benchmark BSE Sensex registered an all-time high of 42,273 on 20th January 2020, and it declined to a low of 25,981 on 23rd March 2020, registering a sharp decline of 38.54%. In the above period, the rupee had depreciated by 7.2% in absolute terms against the dollar. In the recovery phase, the BSE Sensex registered a thumping gain of 46.80% in the 4-month time frame from 23rd March 2020 till 23rd July 2020, and in that period, the appreciation in the domestic currency was 1.68%. This data clearly signifies that during the phase of decline in the benchmark BSE Sensex, the depreciation of the domestic currency is on the higher side, whereas the sharp rise in the benchmark Sensex restricted the appreciation in the domestic currency to moderate. From the above observation, one can reasonably assume that the decline in the local stock market from near the peak level raises the possibility of the rupee to decline gradually lower to test the 76 level over a period of time. Due to moderate strength in the rupee exchange rate and the paying interest from importers and corporates, the 3-month and 6-month forward dollar premia edged higher to end the week at 3.75% per annum. Though the local money market is awash with liquidity, the forward dollar demand and supply gauge the trend in the forward market. The differential between the 6-month and 12-month forward dollar premia is about 0.15% per annum.